One of the most overlooked parts of investing in crypto, especially during a bull market, is taxes. Nobody wants to talk about them, but ignoring taxes until it's too late can ruin the excitement of taking profits. You spend months, maybe even years, building your portfolio. Then finally, you hit the numbers you've been dreaming of. You start taking profits, and then, surprise, a massive tax bill shows up that you weren't prepared for. But it doesn't have to be that way. Understanding how crypto taxes work before you start cashing out can save you a lot of stress and money. So in this video, I'll walk you through the basics of crypto taxation, what events are taxable, how to avoid common mistakes, and how you can legally reduce your tax burden. Let's start with the basics. In most countries, including the US, crypto is treated as property for tax purposes. This means it's subject to capital gains tax when you sell it, trade it, or even use it to make purchases. Here are the most common taxable events: selling crypto for fiat, trading one cryptocurrency for another, using crypto to buy goods or services, receiving crypto from staking, mining, freelancing, or airdrops, selling, or trading NFTs. Even if you're using DeFi protocols, providing liquidity, or flipping tokens, all of that activity can be tracked and may be taxable. Now, let's talk about capital gains. If you sell crypto within 1 year of buying it, you'll be taxed at the short-term capital gains rate, which is the same as your regular income tax, up to 37% in the US. But if you hold your crypto for more than 1 year, you'll qualify for long-term capital gains, which are taxed at lower rates, usually 0%, 15%, or 20%, depending on your income. Timing matters. Selling just a few days too early can cost you thousands in extra taxes. Another common mistake? Thinking that transferring coins between your own wallets is taxable. It's not. But it's still smart to keep a record for tracking purposes. So how do you stay organized? Use crypto tax tools like Coinly, CoinTracker, or Cointing. These tools connect to your wallets and exchanges, automatically track your trades, and calculate your capital gains and income. If your portfolio is large or your activity is complex, consider working with a crypto-savvy accountant. Now for the good part: how to reduce your tax bill legally. One powerful method is tax loss harvesting. This means selling assets that are down in value to offset your gains. For example, if you made $10,000 from selling Ethereum, but are holding a coin that is down $6,000, you can sell that coin and only be taxed on a $4,000 gain. You can also be smart about when you sell. Waiting just a little longer could turn a short-term gain into a long-term one, which is taxed at a much lower rate. Now let us talk about something many people in crypto are seriously considering: moving to a crypto-friendly country. Let's take a quick look at 3 examples. Portugal, 0 tax on long-term crypto gains for personal investments. Germany, crypto held over 1 year is completely tax-free, even for swaps or purchases. El Salvador, no capital gains tax on Bitcoin for foreign investors. But beware, if you're a US citizen, the IRS taxes your global income, even if you live abroad, unless you renounce your citizenship. So speak to a tax professional before making any major moves. Relocation isn't just about taxes. You should also consider the quality of life, legal protections, and whether the local environment supports your goals. To wrap up, know what counts as a taxable event. Track every trade, wallet, and airdrop. Use tools to stay organized. Learn about tax loss harvesting and timing. And always, if in doubt, work with a professional. If you've made life-changing gains in this bull run, congratulations. Now it's time to protect those gains and plan ahead. Let me know in the comments, how are you preparing for taxes this cycle? Have you used a crypto tax tool before? Are you considering relocating to a more favorable jurisdiction? And if you want to dive deeper into crypto strategies, from security to taxes, check out Learning Crypto. calm, no hype. Just real strategies for real investors. Thanks for watching, and I'll see you in the next video.